we saw the roadblocks along the way, but nobody stopped the cars. And we're talking about J.P. Morgan Chase losing $2 billion. There were warning signs, but they weren't paid attention to. So they'd lose $2 billion. The federal government, we're talking with our guests, Jamie Meredith and Rob Wilson, the federal government insures these plans just like they would if you had your money in a credit union, like you talked about earlier. They always talk about capitalism. This is a capitalist society. You should be able to do what you want and make the most money that you can. But if you're making these kind of investments and the investments go south, the taxpayers are footing the bill for you. Well, we're going to make sure that there's a safety net. Is that the way it should work in capitalism?
I don't think that's the way it should work in capitalism. If it was purely a capitalistic society, a lot of these banks wouldn't exist today. So we came to their rescue in an effort to think that going forward, these types of risks and this too big to fail situation was going to be eliminated, and it doesn't look like it has.
And Jamie, you were telling me that the government, the federal government, has people sitting on the trading floor, and this passed them by as well. Were they having lunch?
You know, I don't know. Let's have Ben Bernanke on the show and we'll ask him. But yeah, the Federal Reserve now has offices right on the trading floor, and they now have, the laws were passed that they now have the right to inspect any trade, any book, look at the financial statements, talk to the traders, talk to the risk management. So you can make the argument that J.P. Morgan fell asleep at the switch. I would also say the Federal Reserve probably fell asleep.
Maybe some of those federal regulators are like me talking to you guys, and it could be sleight of hand, and you guys are talking one thing, and I'm saying, well, what did they just say?
I hope not. I hope they are the smartest guys in the room, not the other way around.
Let's hope. And let's talk about the smartest guys in the room, like this Zuckerberg character who's about to make $100 billion by going public with Facebook. If I'm an investor out there and I'm looking at Jamie Meredith and Rob Wilson and say, should I invest in Facebook?
I think you have to.
You want to take that one?
I think you have to look at it two ways. You have to look at, and you have to ask the question, is Facebook as a company going to make business, or going to be successful in business? Are they going to make money? Warren Buffett said successful companies have tall walls and deep moats. And if you look at the internet, it's so easy to have a copycat come and do something that you do better. But if you look at Facebook, and I look to my wife as an example, she's not very sophisticated when it comes to technology, but she looks at Facebook 100 times a day. And I'm thinking, if a competitor to Facebook came up, would she switch? Would she and all of her friends switch? I don't think so. Somebody would have to do something very spectacular to make her switch. So I think Facebook as an entity is well positioned to make money. I think they have the mass and the inertia to do what Google has done, take loads of information and really monetize it. Now, you also have to look at, well, what does this profitability cost? And if you look at how much Facebook is making now, how much they want to sell the shares for, it's very expensive. It can be, you may pay up to 100 times Facebook's last year earnings, which means for you to make money, Facebook has to grow at about 100 times every year. If you look back in history, Google, its IPO was about 67 times earnings, which looked very aggressive at the time, but now Google's up about 600%, so that wasn't aggressive. So I don't know what Facebook is going to do.
The last I read today was they would be going between $34 and $38 a share. That's up from $28 a couple days ago. So that will continue to climb, and will the average investor be able to get in on it?
Well, as far as the actual IPO shares, those shares are gone. But you know, the average investor can try to buy it on the first day of trading, and you'll get a chance to see which direction it moves. But here's what troubles me the most is that a lot of people only get interested in investing when you have something like Facebook come across, and now tomorrow there's going to be a big special on CNBC about it and everything. But the point is, when you're investing, you shouldn't just be trying to chase the next hot thing. Asking should you invest in Facebook is almost like saying, should I bet on black? And a lot of times I tell people, if that's how you want to invest, go take your money, go to Vegas. You'll have a much better time with it. But if you're thinking about investing for the future, and you've got a portfolio, and you've set aside a little bit of that for more speculative investments, then sure, why not take a chance at that? but I'd rather people have a more structured approach to their investments than just looking at the next hot IPO.
So does the media feed on this and then encourage people who wouldn't normally invest to get excited about something like Facebook?
No question. The TV shows have to sell commercials. Newspapers have to sell advertisements. This is what's interesting. You can't, the average investor isn't worried about what Chesapeake Energy is doing, or did in the market today. But because people are logging on to Facebook, they're inherently interested in it.
Speaking of Chesapeake, what does Carl Icahn have to do, and what's that going to mean to that stock?
Well, I tell you, there's been a lot of chicanery, going on there, and when you have these activist investors, activist investors just had the CEO of Yahoo fired because he lied on his resume. Right, yeah. Carl Icahn is known for this, so you can bet there's going to be a major shakeup there.
Doing something I never thought I'd be doing is talking finances with two financial gurus, but you guys make it sound at least understandable to the layman, and I appreciate that, and I hope my audience does as well. Jamie Meredith, Vice President at Heffern Tillotson, and Rob Wilson, Vice President at Blazer Capital Management. Thank you both for being here. It's always interesting, and I think we take away a lot from it.